What is going on, team, and welcome back to another video. I've gotten a few requests regarding the ICT optimal trade entry, also known as the OTE, so let's talk about it. So the ICT optimal trade entry is basically an area where price is likely to reverse off of, and you measure it with a Fibonacci extension tool. These are the optimal trade entry settings that I personally use, so go ahead and copy these before we get into the video. Okay, so essentially what you're looking for is an obvious drawn liquidity. As I've stated multiple times in previous videos, there's nothing more important than knowing the drawn liquidity. So the optimal trade entry can be a model itself, but you also have the pleasure of applying your own model to it, and the optimal trade entry is just going to increase the probability of your trades a lot more. So essentially what you're looking for is some sort of range and a low and a high. So there's a low here and there's a high here. You would draw it from the bottom here to the top. Then you would wait for a pullback into the 0.618 zone, and then you could expect it to reverse off of one of these levels here. So either the 0.706 or the 0.79 or the 0.618, right? So this right here would be the area where you are interested in going long in this case, right? Also because we had just had a sell side sweep here, and we have equal highs here. So essentially what we're doing is that we are waiting for the pullback to hit one of these zones, and then we're going to place our long. Because what happens to a lot of traders is they see a trend in market, right? They see maybe we had 10 consecutive bullish candles here, and then as soon as they press long, price starts to go down, right? So the optimal trade entry is one way to avoid that, okay? So this is what your trade could look like. This is a model that I traded myself a long time ago. This was my primary model a long time ago because it's just so simple and it comes with rules that you have to follow each and every time. So this is an example of a model. You have your entry at the 0.618 level all the time. You have your stop at the low of which you are drawing the Fibonacci extension tool, and you have your take profit at the high. Also, you can look at it this way. Your stop loss goes to the 1 and your take profit goes to the 0. How do we actually apply our own model to this optimal trade entry? Well, let's just assume that you trade a fair value gap after a liquidity sweep, right? Or just an ICT 2022 model, but there is a gap here that never got traced back into, and there is a gap here, and there is a gap here. So which one do you take? Well, from my personal experience, if I am confused on which fair value gap in a leg to take, I always take the one that aligns with the 0.618 Fibonacci level. And I promise you, this has such a high probability of winning when it is combined with this optimal trade entry. I would say that once you start implementing this to your own model, that model's win rate will increase by a lot. Some of my most precise trades have been using the optimal trade entry if my model aligns with this zone right here. Also because if you are trading the optimal trade entry, automatically you will be following the rule of premium and discount, right? Because here the 0.681, all these levels are in discount when you're going long and in premium when you're going short. So automatically you are following the premium discount rule, right? Because if you have been using ICT concepts for a while, you know that the probability of your trades actually working goes up by a lot once you start looking for longs in a discount and looking for sells in a premium. So let me play a clip of one of my trades that I executed this week, which was without a doubt one of my most precise trades, and that was because my model aligned with the 0.618 level of the optimal trade entry. The absolute level of precision here is scary, but let me show you exactly what happened here. So again, I started trading a lot of unicorn models, and this was a 1 minute unicorn model that aligned perfectly with the 0.618 Fibonacci level of optimal trade entry. Holy the precision on this trade was insane. So yeah, as you can see, I trade a lot of unicorn models, breaker blocks, mitigation blocks, just breaker blocks in general. And this one happened to align perfectly with the optimal trade entry. And as you saw, the precision of this unicorn model was just so clean, right? I could have not asked for anything any better, and that is exactly what I mean by applying your own model to the optimal trade entry. But let's jump on an actual chart and let me show you what it looks like. All right, so we're gonna jump onto an actual chart and we're just gonna look at hindsight today. No replay mode, no nothing, because it is not that useful anyway. But I want to show you exactly what you can use this for. So in this case right here, we have a fair value gap here. We have a fair value gap here. We have a fair value gap here, right? And we actually also have a smaller one right here. So how would you possibly know which of these gaps to trade? Maybe you know that the order flow is bullish or that the drawn liquidity is higher, but you just don't know what fair value gap to enter on. Well, this is exactly when you would pull out the optimal trade entry, because we have a low made here, we have a high made here. Then we take our tool from the low to the high, and as you can see, there's only one fair value gap that aligns with the 0.681 or just this zone in general, and that is this small one here. And what happened? Price came down, tapped it, and jumped. And that is essentially the basics of the optimal trade entry. It is just an area that price is very likely to reverse off of if you have the order flow right. So if you are confident that the drawn liquidity is higher, this is such a valid trade to take. And the beautiful thing about this is that you can apply your own model to this, right? So whatever you're trading, maybe you are trading inversion fair value gaps. Well, there's one right here. Or maybe you are trading an order block, right? Well, there's one right here and there's one right here, but you don't know which one to take. Take the one that aligns with this zone here that has the highest probability of actually reversing. But we can also use it on smaller pullbacks. Let's see if we can find an example anywhere. As long as the order flow is bullish, right here, right? Whoop. From the low to the high, price comes down, taps the zone down here, and then reverses. And I promise you that only using this model like this, entry 0.618, stop loss, low, take profit, high, a guaranteed 1 to 6 RR every time, you can make millions of dollars just doing this. And I'm not overestimating anything. If you are able to just follow this model right there and actually study your drawn liquidity, like the daily bias, this stuff can make you thousands and thousands of dollars, okay? Just this. Maybe you don't want to do that. Maybe you like to trade the inversion fair value gap. Well, then you use this as a confluence to that inversion fair value gap right here, right? Because it aligns with this reversal zone of the optimal trade entry. We can actually also use the optimal trade entry on the higher time frames like the 1 hour or the 4 hour or the daily or the weekly to give us an idea of where price is going next. So right here we are on an hourly chart, and that is perfectly fine for a drawn liquidity if you are trading a lower time frame, right? So if we take a look draw it from this low to this high, right? Price hit this zone and we had 1, 2, 3, 4 hours of bullish action. So you know that the draw is higher for the next 4 hours in this case. Or you don't know that it is exactly 4 hours, but you can comfortably assume, especially because it aligns with the end of this fair value gap, that the order flow is going to be bullish for a while after hitting this zone, right? We come down, we sweep this low, we come further down into the optimal trade entry, and we reverse. And then after this, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. A lot of hours with bullish price action, right? So your drawn liquidity can really also just be based off of the optimal trade entry. Now, don't just purely base it off of that, but you can absolutely use it to your advantage. We have the same exact thing happening here. We drop from the low to the high. Price goes up, comes down, hits the zone, and then we have 1, 2, 3, 4 hours of bullish price action, right? That is plenty of time to find a trade. We also have it right here. We have a low here. We have a swing high here. Price creates that swing high, comes down, touches the zone, and then gives us 2 hours of bullish price action. And that is essentially what the ICT optimal trade entry is. And you don't have to trade it like I'm showing you here. You can just use it as an extra confluence for your trades, okay? Just know that you draw it from the low to the high. You can also use it on ranges that are a little bigger. This is on a 1 minute time frame. If we draw it from the low of this range to the high of this range, this is exactly where price bounced off of. So you can look for your little entry inside of this zone on whatever time frame that you prefer to use it on, right? It works on every time frame. There's no limit to time frames on this very concept, right? So the ICT optimal trade entry is without a doubt a great thing to add to your trading arsenal. It is just going to increase your win rate once you start adding this as a confluence. Now, I'm not telling you to go in and just purely trade off of the optimal trade entry, but I promise you this has a very high win rate. I am telling you that you can have an extremely high win rate just using the optimal trade entry as it is. I have a whole video where I do a bunch of back testing on this very strategy or concept, and I believe it came out to be 74% win rate over a longer series of trades, right? And as I said, I have used this model in the past, right, as my primary model. This is one of the concepts that got me my first funded account. I don't remember if this was the actual first strategy that got me my first funded account, but I remember getting a funded account purely trading the optimal trade entries like I showed you, right? So if we take a look at my screen, this is what I did. I established my drawn liquidity, drew it from the high to the low every single time without fail. Entry here, stop here, target here. No stop, move, like I don't move my stop loss. I don't take any partials. It is stop loss or TP. And that is it. And that is it. Literally how I got one of my first funded accounts. So I hope you enjoyed this video. As I said, I got a lot of requests about the optimal trade entry because people hear it, you know, in the corners. A lot of people talk about ICT, but the optimal trade entry is something that I use on a daily basis to give my trades a high probability. As the small clip that you saw of a trade that I placed this week, that is probably one of the most precise trades that I have ever placed, and that is because that 0.618 level aligned perfectly with my own model. And so that just builds up my confidence and makes the probability of my trades go up, right? It just makes it go way up. But there's really no reason not to implement this in your day-to-day trading. I hope you enjoyed. My name is Malik, and I will see you in my next video. Bye-bye.